All right, welcome to this explainer. Today, we are tearing into the absolute behemoth that is the Tata Group ecosystem. We're going to break down the technical charts, dig into the fundamental data, and look ahead at some massive future IPOs.
So is the Tata conglomerate gearing up for its biggest bull run yet? Let's zoom out. We really need to see what the pure data is telling us about the future of this iconic group. We're looking past the daily noise, straight at technical patterns, hard balance sheets, and even some fresh academic research to see exactly what's under the hood right now.
Here is our roadmap for today. We'll cover Tata Motors' technicals and risk, Tata Steel's solid momentum, look inside Tata Technologies, check out the upcoming IPO pipeline, and finally, wrap up with structuring your Tata portfolio. Let's get into it.
Section 1. Tata Motors Technicals and Risk, Analyzing the Breakout and Support Levels.
Okay, so think about how this grueling 8-year resistance barrier was finally smashed. If you're a long-term investor, you know the monthly time frame is absolutely crucial. And man, Tata Motors faced a massive brick wall of resistance between 70 and 600 rupees for literally 8 years, from January 2015 all the way to June 2023. It tried to break out 3 separate times and just couldn't do it. But finally, in June 2023, boom, it breaks out. That triggered a monster rally, launching the stock from 600 all the way to a peak of 1170. Recently, though, we've had a healthy correction of about 3 to 4 months, bringing the price right back down to that initial breakout zone.
Now, this specific 570 to 600 rupee zone is super interesting. Technical analysts call this a critical retest and support zone. You know the old rule, prior resistance often becomes your new support. Well, the stock has pulled back to this exact level, and we are already seeing bullish momentum trying to build right off this floor.
As market experts have pointed out, as long as the stock stays above this floor, that long-term bullish trend is very much alive. Basically, unless we get a definitive monthly close below 570 rupees, the setup is incredibly bullish. Analysts are actually eyeing the next major resistance targets around the 900 rupee mark. Honestly, it's a textbook risk-reward setup.
Moving on to Section 2. Tata Steel's solid momentum, fundamentals and aggressive profit growth.
So the big takeaway here is this absolutely staggering 125% jump in net profit. Just think about that leap, from 1,301 crore rupees in Q4 of 2023 up to an impressive 2,926 crore rupees in Q4 of 2024. And revenue from operations, that got a solid 13% bump too, climbing past 63,000 crores. Guys, this isn't just a minor earnings beat. This is a massive acceleration in profitability.
And this wasn't just a stroke of luck. It was the direct result of some really aggressive cost-saving measures and strategic restructuring over in their Netherlands operations. Management is running a much tighter, more efficient ship now, and they are passing those operational wins right back to the investors, declaring a very solid dividend of 4 rupees per share.
Unsurprisingly, the major brokerages are taking note and setting some pretty optimistic targets. Motilal Oswal, for instance, reiterated a buy rating with a target of 250 rupees. They are loving the enterprise value to EBITDA multiples. Then you've got global players like Nomura pointing to strong domestic demand and cost advantages, giving it a 240 rupee target. And even Axis Securities, who tend to be a bit more conservative, raised their target to 235, noting that volume growth is going to keep expanding as new facilities come online. All right, Section 3. Inside Tata Technologies. Deconstructing the tech giant's valuation. Before we even touch valuations, we have to understand what they actually do. A massive 77% of their business relies on engineering and R&D services for the automotive and aerospace sectors. They aren't just some run-of-the-mill IT firm. We're talking heavy product design, simulation, embedded systems, the really complex stuff. The other 23% comes from technology solutions, like digital enterprise implementations. Keep this highly specialized niche in mind as we evaluate their market price. Now, when we compare the data, Tata Technologies trades at a much higher price-to-earnings premium compared to peers like L&T, but actually shows a slightly lower return on capital employed. Tata Tech commands a hefty PE ratio of over 51, while L&T Technology is sitting around 26. But Tata Tech's ROCE is roughly 21%, which trails behind L&T's 26.7%. So, what's the takeaway? The market is pricing in massive future growth expectations, and frankly, a huge brand premium for Tata Tech. It's a fantastic company, but at nearly 8 times its book value, value investors really need to tread carefully and watch their consistent quarterly sales growth to see if it justifies that premium.
Section 4. The upcoming IPO pipeline, the conglomerate's massive market expansion.
Prepare yourselves for this.
because the sheer scale of this upcoming expansion is something retail investors literally haven't seen in decades. Over the next 12 to 36 months, the Tata Group is widely expected to unleash up to 8 massive initial public offerings. This is a historic unlocking of value from within their private ecosystem right into the public markets.
Let's look at the heavy hitters. You've got Tata Capital with an estimated 15,000 crore valuation. They are already an NBFC powerhouse generating over 13,000 crores in revenue. Tata Autocomp Systems actually already has their SEBI approval. And then you have these absolute disruptors, Tata Passenger Electric Mobility, which could be a $1 to $2 billion IPO plus Big Basket, which is gearing up to dominate the massive grocery and fast commerce delivery space. This isn't just growth, this is total market saturation across finance, auto, tech, and retail.
Finally, Section 5, Structuring Your Tata Portfolio, Balancing Risk and Return.
Okay, we've got the technicals, the fundamentals, and the IPO news. But how do we actually structure this into a framework? Well, a fascinating recent academic study published in the EPRA International Journal compared the risk-return profiles of major Indian equities. And this isn't just broker speculation. This is hard, peer-reviewed statistical analysis, looking at standard deviation, average returns, and market correlation during that crazy volatile first quarter of 2024.
The data shows this brilliant juxtaposition. You've got Tata Motors offering high risk-reward and moving totally independently of the broader market, while a stock like ITC acts as a stable, market-aligned anchor. Think about the breakdown. Tata Motors demonstrated higher average returns, but with a higher standard deviation, so more volatility. But crucially, it showed a strong negative correlation with the broader market, meaning when the Sensex zigs, Tata Motors often zags. On the flip side, a conglomerate like ITC gave lower risk, stable returns, and just moved right along with the market. So, how do you construct the dynamic portfolio out of this? You use the zoom-out approach. First, you ground your portfolio in the fundamental strength of dividend payers like Tata Steel to anchor your capital. Second, you allocate tactical capital to those high-risk, high-return momentum plays like Tata Motors to generate some uncorrelated alpha. And third, you keep your powder dry. Keep some cash on hand so you can aggressively target those upcoming high-growth IPOs like Tata Capital and Big Basket the second they hit the market. The data clearly paints a picture of a conglomerate firing on all cylinders, which leaves us with one final, exciting question for your own strategy. With established giants reporting record profits and 8 massive IPOs on the horizon, how will you trade the Tata ecosystem? Are you going for the steady steel dividends, the technical breakout in AROs, or are you waiting to catch the wave of their upcoming digital and EV IPOs? The opportunities are vast, but as the data showed today, your strategy has to be deliberate. Thank you so much for joining me on this explainer, and I will catch you in the next one.